Here is the overview of today's gold market news. Gold price performance, price trends, and technical outlook. U.S. economic data influence on gold market. Central banks growing gold reserves in 2024 and their influence in 2025. U.S.-China trade war drives gold prices up and boosts China's reserves. Let's have a look at the latest gold price performance, price trends, and technical outlook. Gold prices are set to end the week with a solid gain of 0.8%, despite falling below $2,900 on Friday. The price is currently trading at $2,883, down 1.48% for the day. The drop on Friday is attributed to traders booking profits ahead of the weekend. Gold reached a record high of $2,942.70 per ounce this week, marking a more than 10% surge globally in 2025. This follows a 26% increase in 2024, the largest annual gain in 14 years. Prices have reached an all-time high this year, breaking multiple records, and analysts predict that gold prices could rise another 20 to 25% in 2025, potentially reaching $3,400 per ounce. This surge is primarily driven by concerns over global economic growth, inflation, and uncertainty surrounding U.S. President Donald Trump's tariff policies and central bank bullion purchases. Gold attempted to extend its bullish momentum, rising above $2,940, but faced selling pressure, leading to a bearish retracement. The price dropped to $2,879, which is testing support along an uptrend line. This could signal a potential further decline. The weekly chart shows that gold is forming a bearish shooting star candlestick pattern and a small possible double top pattern, with the neckline at Tuesday's low to $1,864. If the price fails to hold support at this level, it would strengthen the bearish outlook and increase the likelihood of further downside. A drop below this week's low of $2,853 would trigger a bearish reversal, potentially sending gold to test the 20-day moving average around $1,817. A bearish correction could be in play, but it would not negate the longer-term bullish trend unless gold drops below $2,772. The key support levels to monitor are current test at $2,879, the 20-day moving average at $2,817, the recent breakout level of $2,790, and the monthly support at $2,772. A drop below the monthly support would significantly shift the longer-term outlook to bearish. In the intermediate outlook, gold must hold above the 20-day moving average at $2,817 and avoid dropping below $2,772 for the bullish trend to remain intact in the medium term. Gold's price uptrend remains intact, though there is a short-term retracement. Gold hit a today low of $2,878, but remains supported by the February 12th daily low of $2,864. The psychological key support is at $2,850, followed by the October 31st cycle high at $2,790 and January 27th swing low at $2,730. If gold prices rise above $2,900, the next resistance is the all-time high of $2,942. A breach of this level could lead to a rise towards $2,950 and even $3,000. Moving on, here is the latest on the U.S. economic data and market reaction supporting rising gold prices. Economic data from the U.S. showed mixed results. U.S. retail sales sharply declined by 0.9% in January, worse than the expected 0.1% decline, contributing to the weakness of the U.S. dollar. However, U.S. industrial production improved by 0.5% in January, exceeding the forecasted 0.3% increase, though it slowed from December's 1% growth. The sharp drop in retail sales weighed on the U.S. dollar, which weakened across the board, reaching yearly lows. Treasury yields also fell, dropping by 6 basis points to 4.47%, which further supported gold prices, as lower yields make bullion more attractive. The drop in Treasury yields and the U.S. dollar's weakness, alongside investor expectations of Federal Reserve rate cuts, created a favorable environment for gold. In addition to that, Real yields in the U.S. dipped to 2.0 for 1%, which further supported gold prices. Following the release of retail sales data, investors began pricing in more than one rate cut by the Federal Reserve in 2025. This expectation of easing monetary policy boosts gold's longer-term appeal. Next, let's look at the central bank's growing gold reserves in 2024 and their influence in 2025. The World Gold Council reported that central banks purchased over 1,000 tons of gold in 2024, marking the third consecutive year of significant gold purchases. This trend has been boosted by geopolitical events, such as the electoral victory of former President Trump, which led to a 54% year-over-year increase in central bank purchases. The World Gold Council predicts that central banks will continue to be active buyers in 2025 due to geopolitical tensions and macroeconomic uncertainties. Central banks, particularly the People's Bank of China, are diversifying their reserves into gold to hedge against inflation. The central bank added gold to its reserves for the third consecutive month in January 2025. As of the end of January, the bank's gold reserve stood at 73.45 million fine troy ounces, up slightly from 73.29 million troy ounces in December 2024. The value of the gold reserves increased to $206.53 billion by the end of January, up from $191.34 billion at the end of December 2024, reflecting both an increase in reserves and rising gold prices. After halting an 18-month-long gold purchasing spree in May 2024, the bank resumed buying gold in November 2024, which has influenced investor demand in China. Here are the effects of the U.S.-China trade war, which is driving gold prices up and boosting China's reserves. The uncertainty caused by the U.S.-China trade war, including the U.S. imposing additional tariffs on Chinese imports, has contributed to the rising gold prices. China responded with a package of retaliatory measures, and analysts suggest that the ongoing trade war is a major factor behind China's increasing gold reserves.